Volume profile is one of the most powerful tools, and it's even more effective once combined with order flow footprint charts. And in today's video, I'm gonna break down every piece of volume profile that you need to know and understand, and I have no doubt it'll change the way that you view the market and the way that you trade. Before we break down volume profile and the details about volume profile that we need to know and understand, we need a little bit more context on why we even look at volume profile. And that's going to turn us to auction market theory. And to understand auction market theory, the volume profile is going to help do that. So imagine a live auction. Buyers are bidding, sellers are offering, and price adjusts until they meet an agreement. This is how financial markets work, and price is always searching for equilibrium. So when there's balance, price stays in a range. When there's imbalance, price moves, seeking new buyers or sellers until balance is restored. And our job as traders is to identify these shifts and position ourselves accordingly. So I made this little graphic right here within the community. And if I pull this up, you can visually see how the market moves in two states: a balanced state and an imbalanced state. A balanced state and an imbalanced state. The market is always moving between those two states. And our job as traders is to identify and try to understand, are we in a balanced state right now, or are we in an imbalanced state? Because if we're in a balanced state, market tends to consolidate a little bit more. So it might be more conducive for range-bound strategies, right? It's giving us more market context so we can make more educated decisions. Now, is the market in an imbalanced state? If that's the case, maybe I don't want to be deploying a range-bound market strategy, and maybe I use a strategy that's more for catching trends. Maybe I'm a trend trader, whatever the case might be. You don't want to be holding for a trend through a balanced area, because we already understand in a balanced area, we tend to have a range-bound market. We tend to consolidate, and in an imbalanced market, we tend to have the market trend in one direction. And again, this is a little visual. This is a bell curve, but this is what the volume distribution is going to look like on a volume profile. So as we understand that, let's get into volume profile and break down the details about it that we need to know and understand to be able to apply these order flow footprint charts under the idea of auction market theory. So number one, we have the point of control, and the point of control is going to be the highest volume node within the distribution of volume. So if you're not familiar with the volume profile, a volume profile is going to be a distribution of volume at various prices. And the smaller the volume node, the smaller trading activity occurred at these specific price levels. So you can see right here, this is a point of control. This was the exact price level where we had most of the trading activity occurred. And oftentimes, this point of control is going to act as a magnet, due to the fact that this price level has a lot of trading interest, hence why it's the highest volume node. So to give an actual example, we're going to look at the footprint order flow chart. You can see right here, I already have the point of control marked out, and we're going to go ahead and press play. And we're going to just watch how price likes to react or tends to react off of these point of control levels. So if I speed this up a little bit more, we'll get a good idea on a visual for how price reacts at these levels. So you can see we're spiking up a little bit here. For a little bit more context, I am on an hourly chart. I'm going to go ahead and pause it right there because there's something I want to show that's interesting as price starts to trade at or near this point of control. So we haven't broke down what these candlesticks are yet, but I have the candlesticks set on to show me where most of the volume is traded and occurring within the candlestick. So you can see I almost have a smaller volume profile on within the candlestick, and you can see a bulk of the volume on this candlestick was traded on the wick of this candle, which this was the wick that went to the point of control. So you can see a lot of the trading activity occur at or around the point of control just by looking at the order flow on the wick and being able to see the distribution of volume on the candlestick. We can see majority of this occurred at or near the point of control. Also furthering how I was saying, most of the market interest takes place at these point of control. There's a lot of trading interest, whether that's buying or selling, that takes place at the point of control. That's why we want to use it as a reference point. That's why we want to use it as a guide whenever we're looking at the markets and trading live time. We got a value area high and we have a value area low, which now gives us this range. And like we talked about in the beginning, this range right here, where we see this balance zone, this is going to be where we find that. That's going to be the value area high. That's going to be the value area low. And this is going to be our balanced market. This is going to be the range where we're going to see balance. This is going to be the range in the market where a range-bound strategy is going to be more conducive, right? So again, visually, this is where we get it. That's why I put this little bell curve here to try to give you the idea. That's where the volume profile would be. This would be the main value area of the volume profile. And this is where it would be a balanced state and where it's more likely to consolidate and be a range-bound market. So that's going to be the value areas. You're going to often hear it referred to as the VAH, which is a value area high, and the VAL, which is a value area low. Again, like I said, it tends to be a range-bound market. The reason for this and the reason why we can be comfortable and confident in these levels and in these ranges is because we already understand that these main value areas, 70% of the trading activity occurs and has occurred within this area, right? And we get that from a distribution curve. So if you've taken statistics before, you understand that middle part of the distribution curve has stats behind it. And if we understand that the market is going to spend 70% of its time within the value area, 70% of the trading activity is going to occur within the value area, we understand, like we said before, it's going to be more conducive for a range-bound strategy, or it'll just help us manage our expectations more accurately, right? If we have a trending market, maybe we want to start scaling out of our position, once we start getting to these value areas, because it's going to be a little bit more naive to think we'll just trend straight through the value area. It happens. I've seen it happen myself, but it's not going to be as likely, right? We want to trade the probabilities and not the anomalies. So this just gives you a little bit more market context, which helps manage our expectations a little bit more. This also suggests price moving outside of this value area suggests imbalance, which would be a trending market. So if we understand that, again, if we're trending within the value area, it's likely to be a trending market. It's likely to be a range-bound market, which we also identify that as a range-bound market, a balanced market. If we're trading outside or we see price acceptance outside of the value area, this suggests we could be heading into an imbalanced market, and we could expect a directional move to one side of the market. If that's above the value area high, we could expect a directional move to the upside. If it's outside of the value area low, we can expect a directional move to the downside. That's why we want to have an idea, where are our value areas, so that we can properly manage our expectations. And it just gives us more market context as to what state the market is in. Next is going to be our high volume node areas, right? The point of control, it's going to be our highest volume node, singular. Our high volume nodes is going to be where, there's going to be groups of peak trading volume on this volume profile. So before going into the week, we want to make sure that we have our main value areas and our other high volume node areas marked out on the chart so that we can manage our expectations and have a little bit more market context. So you can see here this Sunday night, we had our value areas marked off, inside the community. We marked off our main value area. We marked off our high volume node areas. And then we can just see how that played out throughout the week. We can see at our low volume node area, we got a lot of a bullish response off of the high volume node area. Not only that, a couple times in the week, I think about 3 times total, we saw a lot of absorption whenever price did come down to these levels. So we saw a lot of passive buyers absorbing the aggressive sellers, which would be very bullish. Not only that, we saw that at around our high volume node areas or our main value areas. So having these marked off in the week just give a little bit better idea on where we can look to see if price will respond off of, to see our buyers going to be more aggressive here, our sellers going to be more aggressive here, and just providing that market context can be extremely helpful. So we can even see here on the Wednesday night recap, we have a visual absorption going on right here. So we can't see that on a regular candlestick chart. Right. And just quickly, I'll briefly explain what absorption is. That's going to be whenever we have negative delta and a positive candle. I'll briefly break down. Negative delta is going to be whenever there's more selling than buyers, more sellers than buyers within a candlestick. So it doesn't mean if we have a negative delta, there were no buyers. It just lets us know we had more sellers. So here we had a negative 1.9 thousand delta. So that lets us know, yes, there were buyers within this candlestick, but we had 1.9 thousand more sellers than buyers. So if that's the case, how can we have a green candlestick? Make that make sense. How is that even possible for price to go up if we have more aggressive sellers than aggressive buyers right now? Well, we can understand we may have some absorption going on in the market right now, right? Because we have passive orders and aggressive orders. And everything we see on a footprint chart on this order flow is going to be all aggressive orders. So if price is going up, the candle is closing green, but we have a negative delta, that lets us know the passive buyers are absorbing and overwhelming the aggressive sellers hitting the market. And we can even see longs potentially getting liquidated here or shorts getting trapped right here. But either way, we saw absorption, and then we had a short-term momentum to the upside in the market. And ultimately, we headed to the upside later on in the day and later on in the week. So whenever we see things like absorption and we combine it with volume profile, auction market theory, all these kind of things, it lets us piece all the pieces of the puzzle together to get a better understanding and just more market context. Again, auction market theory is not a strategy in itself. Auction market theory is the idea, and we create processes and systems around the balanced market and around the imbalanced market.